The Treasury bills market was quite ahead of today's primary market auction, where the Central Bank of Nigeria will offer 127.5 billion naira. And I have with me Bukky Aregbesola, the head of fixed income at Access Bank. She joins me now as we look at the markets today. Thank you so much for your time today, Bukky. And let's first get a sense of your expectations from the auction, for the auctions today.
So we expect that the rates would hover around same levels as the last winning rate, and the reason is because the money market remains fairly liquid from the FAC payment last week and also the 40 billion repayment on OMO, which happened yesterday. So the usual trend that we see when market is liquid is that people try to deploy these funds into short-tenured bills so that they don't get debited CRR at the weekend. So we expect that based on this, the demand at the Treasury bills auction today would be decent. So barring any significant over-allotment by the central bank, we expect that the rates would remain around the same levels.
All right, but what do you make of the central bank's auction strategy going forward?
Come again, please.
Yeah, I'm looking at the auction strategy of the central bank, and I'm trying to understand for what you make of how they've been going about this, especially since the beginning of the year.
Well, I think they had a good head start at the beginning of the year. Both on the treasury bills and the bond side, they were able to raise significant amounts at pretty decent levels. So I think that at this point, they have a bit of leeway to try and still manage rates as we've seen them doing over the past 1 year thereabouts. So we do not expect any significant move in yields, particularly on the bond side, till maybe towards the third quarter. And again, it also depends on if on their side there is any requirements to increase, what they need to borrow. This may be the only game changer that we would see. Other than that, we expect that yields would move pretty in the same levels as they've been doing, so 10-20 basis points thereabouts.
Right, but looking at recent development, I want to look at the Eurobonds market, and then with the recent move from JP Morgan, how do you reckon this is going to affect us?
So what JP Morgan has done is to change their recommendation to their clients that instead of people being overweight Nigeria, which is the recommendation they've been making before now, that people should have medium, sizes of Nigeria instruments in their portfolio. So what we expect is that clients that were overweight Nigeria before now would have to sell down some amounts so that they can rebalance their portfolio. And the impact on this on the market that we expect is to see yields trending up, which again we've been seeing even before the announcement came in.
All right, but when you look at what we've seen play out in terms of liquidity, though, yes, we've seen some maturities come in, but what's your outlook for the rest of the month?
Are you talking of Eurobonds still or the domestic market?
All right, because I was asking about your outlook for liquidity for the rest of the month.
Okay, for the local market, we expect that the markets will remain liquid up until Friday, where we have the retail auction. So we do not see any significant changes in liquidity as well as in the market until Thursday, Friday, where we have the debit for the Treasury bill auction, and peradventure there's a normal auction as well. This would impact liquidity, and then also the retail auction, which is expected to hold on Friday. So we anticipate that this liquidity will gradually thin out, and that may impact yields opening next week. We'll see yields going up.